We are still in our Christmas mood, but nevertheless, we have to look at our most preferred and favored investment vehicles in 2024, and those are the money market funds. This video, we are looking at the top 7 money market funds. Previously, we have been looking at the top 5 money market funds, but we have two new entrants which have starred the top 5 lists, and that is the GovCap Money Market Fund and the newest kid on the block, that is ZD Money Market Fund by Safaricom. We shall be looking at the performance schedule and the asset allocation schedule after a short break, because those two documents will be very important for our evaluation. And looking forward to the beginning of 2025, I'll be telling you why the fixed income funds, better known as the bond funds by various fund managers, they are likely to surpass the returns that are being offered by the money market funds, and I'll be telling you that reason. I will also tell you why there has been a slow decline, or the trend in decline of the returns from the top money market funds by performance has been more gradual compared to the steep fast decline of the market interest rate as posted by the treasury bill auctions, which by today's still stands at 11.4% as per the 364-day treasury bill, while the 181-day treasury bill posted at 10%, and almost the same for the 91-day treasury bill, which hit a 9.9%, and the prevailing inflation rate has remained at 2.8%, a slight change from the previous low of 2.7% recent posted. We'll also be looking at why ZED is important to form part of your investment vehicles come 2025, and why I believe, or the channel believes, that ZED is there to top or to remain in the top 7 money market funds or the top 10 money market funds. Let's delve into that analysis after 3 seconds short break. In the meantime, as always, as we request, give us a like to this video if it has value, and if you are new to the channel, give us your subscription and don't fail to hit the notification button, because when we upload our next video, YouTube will be sending you a notification. Engage us in the comment section, because that is our suggestion box. That is where we come back to see what you would like us to look at next, and probably to answer your questions. See you after 3 seconds break. Welcome back, and here is a schedule of the performance of the top 7 money market funds towards the close of 2024. Noted that Saiton Money Market Fund has maintained its position number 1, and looking at the historical data, Saiton has remained top since 2021. At the close of 2024, Saiton has posted a net of 14.31%, that translates to 16.84%. And that being the top money market fund at the close of 2024, it means that we have now dropped to below 17% gross returns from the money market fund. That is not leave out that the average return from the money market funds stood at 14% across the board, and therefore considerably that is above 2.8%. The second money market fund on the list is Lofty Carbon, which has hit 16.48 gross, translating to 14.01, and Etika has 13.72% net return. Net return is the gross includes taxes but net of management fee. All disclosed rates by the money market funds are always given net of management fee but inclusive of taxes, except one money market fund as we'll be looking at, which is ZED Money Market Fund on its online platform, or the ZED mini app on Safaricom. the figure or the rate of return that is given on ZD application is the net return, that is after tax. Once you calculate the figure or what need to be paid to you as interest on a daily basis, you are not going to be adjusted for taxes because that has already been adjusted and it is clearly stated on the app notes. The other important thing is that towards the close of the year, that is 2024, there appear that Kuza Money Market Fund has pushed down Avoca Money Market Fund because Kuza has been number 5 for the longest time in 2024 and now comes number 4 at a net of 13.55%, pushing Avoca to number 5 with a 13.09%. You will note that we have the new two entrants, that is GovCap Money Market Fund by GovBank, and if we had included the GovCap Money Market Fund in the list, it would be number 3, having posted a net of 13.81%, which is above what Etica has given us in position number 3. The reason or the rationale behind us not including it at this point is that we need first to do an analysis of the fund fact sheet of GovCap and also the asset allocation schedule. But it is important to note that this new entrant or the new money market fund ranks number 3 in the performance list. Then we have ZD Money Market Fund, that should be our number 7, posting a net of 12.85%. Curiosity that I've included that ZD Money Market Fund as number 6. It has a soft spot in my heart, and I believe that ZD Money Market Fund is the newest money market fund to watch, as hoping that much of the assets under management and the Mali Money Market Fund will see their way to ZD Money Market Fund. And as at November 2024, Mali Money Market Fund had a total asset under management amounting to 11 billion. Our chart of top 7 money market funds will reveal that the largest money market fund by size or by asset under management is Etica Money Market Fund with a total asset volume standing at 6 billion, and therefore considerably we are looking at ZD Money Market Fund either surpassing that size in asset management or coming close to what Etica is controlling, probably by the close of 2025. I did promise to tell or to state the reason why the fixed income funds, which are better known as bond funds by various fund managers, are likely to give us higher returns compared to the top 7 money market funds in the first quarter or by the end of the first quarter of 2025, because the major reason is that once the economy stabilizes, because uncertainty or risk is pegged to time, most fund managers will start assuming longer term investments because of certainty in investments. And for that reason, we'll find the fixed income funds attracting more investments compared to the money market funds, and that the market interest rate declining, affecting the short-term instrument market, that is the money markets. We are potentially going to be seeing increased declining trend of the interest rate as posted by majority of the money market funds. But as we shall be looking at the asset allocation schedules of our top 5 money market funds, you realize that they have a huge protection to the base interest return, because majority of the assets held under the money market funds are not held directly in the instruments affected by the declining interest rates as posted by the treasury bill auctions. The second item was why the declining interest rates as posted by the money market funds is not as steep compared to the decline in the market interest rates as posted by the treasury bills. And as I had stated as the reason behind the fixed income funds, for that reason, because these money market funds, they have a huge percentage of their portfolio sitting under fixed deposits and collective investment schemes, and only a small percentage sits with the government securities. And therefore, a huge part of the assets under management was not directly affected by the declining market interest rates. And therefore, for that reason, as per this schedule confirming those percentage allocation of assets to the various asset classes, it is clear that, and a good example being Lofty Carbon, allocated 90% of the assets under management in its money market fund to fixed deposits, meaning that they had very little or none invested in the treasury bills and the bonds, and therefore it was not directly affected by the declining or the steep declining interest rate, market interest rates as posted by the treasury bill auctions. And therefore, the most relevant variable to look for in determination of the decline in the decline in interest rates posted by the money market funds in the top 5 in performance then would be the bank lending rates, which have remained closely guarded, and at the same point only a small decline has been reflected. And looking at the base lending rate has remained as high above 12%, but still expected to continue coming down as the market interest rate continues to decline. That is the most relevant variable to look for in the determination of for how long we expect the top 5 or 7 money market funds to continue giving us the close to the current rates as posted towards the close of the year. From the same schedule, you will notice that Saiton Money Market Fund holds a considerable percentage of its money market fund portfolio in collective investment scheme. And looking at what Manza X has been posting and what has been posted by the Ox Special Fund, which are majorly some of the special funds where the fund managers would distribute a part of their asset class to, then would still hold that Saiton would continue potentially assuming position 1 in the near future. ZD Money Market Fund has also received several questions, and especially regarding the 3 fund managers, as was posted during its registration by the Capital Markets Authority, where it had Hala Capital, Sanlam, and SIB as the 3 fund managers. And as we have seen the questions fly around, majority of investors are looking at potentially asking how the 3 fund managers will go about sharing the management fees. And as a channel, believe that the back end of the investment is not a space suitable for the investor to keep looking at, because the fund managers and Safaricom, as per the agreement, they know how those management fees shall be distributed. And again, the amount or the size of the amount that is to be distributed is potentially dependent on the size of the fund under management. The management fee rate being a constant of 2% across majority of the money market funds, the most important variable in determining the amount that is to be distributed lies with the object to which that rate is applied, and that is the fund size. Ethica Money Market Fund was assuming a 1.5% market share by the end of quarter 3, with assets under management standing at about 5 billion, then 11 billion will be way beyond 3% market share, which is considerably a good fund size. Lastly but not least, and having considered that the fixed income funds or the bond funds are likely to start posting rates that are higher than the money market funds, for those investors who have accumulated all their assets or their investments in the money market funds, they may consider diversifying or spreading a part of that investment to the fixed income funds, or better, if they have reached the minimum required for the special funds for purposes of averaging up their returns as the market interest rates continue coming down. There are also other opportunities or other investment vehicles that can potentially cushion against the declining interest rates, noting that there is an inverse relationship between the bond market and the equity market, in that as the bond market rates come down, the equity markets start going up, and therefore we notably see a shift of capital investments from the bond market to the equity market. And potentially, where you feel you don't have the appetite for risks as projected in the equity market, then you can consider equity funds and balanced funds, which are collective investment vehicles that target the equity fund targets investment in shares, while the balanced fund targets investment in equities and also bonds. And therefore, that will give you the higher interest rates from the equity-based collective investment scheme and the money market funds. They, when combined, you'll get an averaged half return from the combined portfolio. The rationale behind that is that your emergency funds cannot fit in any other investment vehicle. They are best suited in the money market funds because the characteristics or the attributes of the money market funds, they best suit your emergency funds, including accessibility, convenience, and the like. See you in the next video as we look at the fixed income funds or the bond funds and how they performed towards the close of the year. Thank you for watching.